Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the dollar strengthening just a little bit. You can see the euro dollar pairing back. We've talked about the significance of this 1285. And I thought the 1285. I mentioned it last week. I thought it was important, but I thought it was important in the sense of just to turn things around as far as momentum. Because obviously, the key thing is we had resecured this 1262. We had broken below, and that really opened the floodgates, and we really hit some extra stops lower. And once we got past 1262, I'm like, okay, well, the key thing is we know it's this 1285 that'll get the momentum. But I thought that was just a matter of time, and we'd get past that. And boy, that has really kept a cap on this market. And you've seen it gone and really have some difficulty in just kind of paring back. One of the things we talked about yesterday, I was almost going to put the buys chart at 1307. I thought, that's a little bit too close, because once we get past 1285, yeah, we'll see a pause around 1307, a little bit of a dip back, but the market will reassert itself. And here's where your resistance is coming in, 1326. If you're looking at the 2-hour chart, 1324. As my dad used to say, Mox Nix, makes no difference. But the thing is that we couldn't even get past this 1285. It's really having a tough time. I remember talking about this, a few days ago, and I said, well, hey, watch out, we got some resistance here. And yeah, it kept the market in check. But even back then, I thought, okay, it's probably going to pop right through there, but there's some minor resistance. It's really keeping the cap on this euro. Now, one other thing, and I know I mentioned on the daily roundup, I don't think I mentioned it yesterday here, which was if you take a look at the bunds have had a decent rally off of that sell-off. I mean, obviously we went to new all-time highs, which is new low rates, inversely speaking, on the bunds, and that really weakened the euro. Now, we came off quite a bit, but we since we're bouncing back, and that's providing a little bit of extra pressure here with the euro. Let's go on and move on. And we're seeing the cable continue to further drop. We did have data today. Just a moment. And that's going to come at the bottom of the hour. We do have employment change, the unemployment rate, employment data. And we talked about this yesterday, or at least we did on the daily roundup. They're referencing that the cable was starting to slide back because basically the same old thing, the Brexit worries. And we had seen an okay amount of short covering come into the place, and we thought, the market was still technically open to move even a little bit higher, but we really started the week on the back foot. But they were stating, hey, look, it's about the Brexit worries, but what they're really looking at is going to be is how the market holds up, or how is it going to fare under these conditions. So right now they're selling right off into this and continue to press this thing further. So we shall see. We'll get back to that. Let me just go and move this out of the way. Should move it here. Okay, I do apologize. Let's see. I think I did have my unmute on. I had it off. I just had the little box on. So I'm glad I didn't have myself muted during this exchange. But you can see here with the dollar index, we're making it right back here. This is where we had our buys chart resistance, where we're at right now, right here at the 97.08, and we're just pressing up against this right now. Let's move this out of the way also. So, I mean, I would have thought that the dollar index probably would have maybe hold okay, but start to pare back. This was actually for yesterday, although our buys chart is for that day and looking out 24 hours. And certainly we're hitting it right now. But this is some resistance here. It's obviously waiting on the euro, because look at the euro. Golly, you would have thought it would have been up above 113. And we just simply not been able to grab something. And it's really, I mean, I'm pretty surprised here. I'm not even doing anything with the euro right now at all. But really, it's quite a bit of a surprise to see how this market simply can't even get above 113, even when the dollar was looking rather woeful. Other than that, we'll see the gold market stay in this range right in here, relatively quiet ahead of retail sales. We did get the RBA minutes, not any real big action. I would have thought maybe a little bit further fall through with the Aussie dollar, but nothing of any real significance to go on and speak of. Let's go on and go into the cross rates and just touch those quickly before we move on to the news. And just saying good morning to a couple of the guys in the room. But look at this. We did talk about this yesterday, touching on that, and we spent a little bit more time yesterday on the daily roundup, and that's on the sterling versus the AUD. And let's pull this up on the daily. Oh, put in the wrong keyboard. Got too many keyboards here. Hang on. Now, where the heck is our little bar? Oh, there it is. So we had the sterling AUD appears inclined to test the 78.47 on its way to 77.40. Well, lo and behold, folks, we're already here at 77.40. Now, here's my concern. I mentioned this yesterday on the European crossover, because like I said, this is what we were looking for the market to get to. It hadn't quite got to 78.40, so we said, hey, look, we're looking to test the 78.40 on its way to 77.40. Let's pull this back out for a little bit better perspective. You got some nice support coming in here. Maybe we can plus a little bit lower, but look, my concern is the disparity between these exponential moving averages. You can see here, the last time we had this disparity, you see how the market turned around and pulled back pretty good. Same thing here. This was even a very, very wide disparity, but remember, it was working. It already had come off quite a bit. If you look at here, here's the disparity we saw here, and then we saw the market come off, let's say, from 87.60 down to what, 84. So pretty good pullback here. My thoughts being is we may just test below 77.40, but be careful. I did mention on the roundup was that it doesn't, if you saw here, it took a few days before, finally you saw a bit of a pullback. Not only a few days, but maybe a couple, 3 days after we ever got there. But be a little bit wary. We do have the employment data today. This is a good opportunity for this thing to step down, but possibly go and get a pull back up here. Let me see. Yeah, Bierkman, I thought I did say 77.40. I apologize. He says, if I'm not mistaken, 77.40 is a support level on your end for sterling AUD. Yeah, that's correct. And I thought I said 77.40. I mean, I have it here, unless I got tongue-tied, because if you see here, it says appears inclined to test 78.47 to 61%, because this was done at the beginning of the week, on the way to 77.40. So, yeah, if I said it incorrectly, Birchman, thanks a lot. I appreciate it. Sometimes I will twist things around here. But you can see here this 77.40. My concern is, and like I said, is that the disparity between the two exponential moving averages, look how it wasn't even that much here, but look, we saw a pretty good pullback. Oh, this was March, and look how that after several days. Well, the March here isn't as dramatic, but once again, we're a bit stretched here. It doesn't mean, hey, get long, but what I'm pointing out is that, and I mentioned it yesterday on the daily roundup, I spent just a little bit more extra time on it, is if we get this dip back, so here's 77.40, we have the employment data. If you get a little bit of further pushback, as I mentioned on the daily roundup, I would be, at the very least, tightening my stops, or on this a drop through the 77.40, and we've got a catalyst right now, which is going to be this employment data. If you want to put your stops, not stops, but your limits right there. See there, 76.69 here. You could maybe see a dip here. Let's go on and Let's go on and do just that. All I'm saying is if you've been running this thing short, keep in mind here on this dip here, this would be a great opportunity to go in and cover at least some of those shorts. I mean, if you're like Amanda, I don't know what Amanda's levels are. Maybe she's looking for something way down here. I don't know. I'm just saying is that if you look at this disparity, look at this. Look how, we saw a bit of a pause, but look, it's been down, down, down like the submarine honking. And if a quick dip down here, we may have the opportunity for the market may use that dip to cover some of those shorts. So at the very least, tighten up your stops. You may want to have some limits down there on this employment data. If it comes in weaker, take advantage, and then the market may look to pare back. But let's go on and move on to the news. Enough of that. But thanks for the mention, Bearsman, because like I said, she wouldn't want to give the incorrect data for sure. So I appreciate that. Hang on. Just going to go and say good morning to Takas. I'm going to use a different screen for that. So my monitor turned the chat room. So let's go and move into the main screen, folks. And the only reason I mentioned it is because we have maybe on the later recording, we have people that may be able to take a look at something real quick. If they're not subscribers with ForexAnalytix, they're probably wondering, and they're watching this as a later recording. But anyway, let's go and move into the news. Morning bid from Berlin to Brussels, von der Leyen's. Germany's Ursula von der Leyen will learn from a European Parliament vote this evening whether she'll become the first woman to head the European Commission, the executive body that shapes EU policy on everything from trade to Eurozone fiscal measures. I don't want to spend any time on politics. I really don't. I need to just stick up the market. Okay, let's take a look. Let me just quickly go through this real quick. Mainly about the second quarter earnings here with Citigroup. Let's go and move straight to the guts here. Asian bourses were mixed earlier with lingering trade, with fears stoked by another round of bellicose comments on the issue from President Trump, who said slowing economic growth in China to a 27-year low was evidence that the U.S. tariffs were having a major effect. Oh, God. And warned that the Washington could pile on more pressure. Japanese Nikkei, back from Monday's holiday, dropped 0.7. Shanghai was a shade lower, with Hong Kong still on the black. U.S. stock futures pointed north, while Europe was braced for more minor losses in the open. In currency markets, the dollar index was firmer. Eurodollar was probing 12.50 on the downside, and sterling was also under the cosh early Tuesday, slipping below 125 as traders awaited June's UK jobless numbers and eyed that final rounds of the contest on the next round of the UK PM was likely to be won by a hard Brexit advocate Boris Johnson. Australian dollar retreated from recent highs after the RBA minutes indicated it was ready to cut interest rates. Bitcoin continued to push lower after weekend drubbing related to U.S. moves against cryptocurrencies and warnings about Facebook plans for a stable coin called Libra. Let's go and move in. Okay, so here we go. UK jobless May earnings. Let's move further down. German zoo numbers and U.S. retail sales. Okay. Sterling sags on Brexit concerns and weighs on euro. The pound struggled near a 6-month low against the dollar on Tuesday, hampered by persistent worries over Brexit that in turn weighed on the euro. Surprising. Sterling was under pressure as investors were nervous about the prospect of Eurosceptic Boris Johnson winning the Conservative Party leadership. Poor economic data and signals from the Bank of England could cut interest rates instead of raising them as previously expected. The euro has been weighed by the long struggling pound, which in turn likely to suffer from Brexit-related woes. So I don't know about that. I mean, I believe that part, but I mean, they're always finding one reason or another. But I mean, what they're stating is, and I've seen that mentioned a couple of times here, is that the struggling pound is weighing in the overall picture for the euro. A little bit of a stretch. It's to a certain extent. But it does, I mean, obviously a key trading partner, the euro versus the pound, very key currency. The U.S. currency rose to a 6-week high of 8,990. Let's see here. which is up in the dollar yen, after the Federal Reserve Chairman Jerome Powell set the stage for a rate cut later this month by highlighting uncertainties facing the world's largest economy. The dollar lost further ground against the yen towards the end of last week after Chicago Fed President Charles Evans said that a couple of rate cuts were needed to boost inflation. Dollar yen has strengthened its correlation with the U.S. yield since May rather than move in step with equity prices, says Daisuke Katakama. Prior expectations that higher equities would weaken the yen, held by some market participants, have been dashed completely, and the prospect of Fed easing monetary has been boomed to equities, with Wall Street shares advancing to record highs over the past week. A yen, a perceived safe haven, has often depreciated when strong investor risk appetite has boosted equities. So let's go on and move on into the charts. And we're going and have the news or the Reuters feed on here when we get ready to take on this data. Well, I mean, you have to go with what the theme is. So, right now they're saying the theme is that the euro is struggling because of the concerns with sterling, with cable, if you want to reference it, sterling in general. So it's certainly keeping its pressures right here. Now, we did have on our bias chart, we are into some support here, but that's from yesterday, which you can see here is at 1243. So right there. I mean, the low right now has been 43. But let's go and take a look here with the euro. Speaking of the devil, how much further can we push back down? Let's go and take a quick look at just a fib. And really, it's a little bit too close, Support's going to come in there, at least for right now. 1231, but my concern is, unless this UK data turns around, it's going to come in a little bit lower right there. There's a potential for this market to slip to 1225. Now, we'll see if this 1243 can hold. A lot to do with this UK data. Obviously, if it will get a bounce back here with sterling, we'd see a little bit of a move here, but we got to factor that in, and potentially we can come down here to 1225, but we're going to put that in the bias chart. You got to know your risk. On the upside, well, 1285. Until we can get past that, boy, that is one heck of a ceiling. And, I thought it was, I remember when we were making that move above 1262, we just closed at it or above it. I think that was it Thursday or whenever. And I said, well, the real key is this 1285. That was at that day. And I thought, okay, 1285, it's important, but I just thought, to a certain extent, it was almost like a mile marker on our way to challenge that 1326 and get, around above 13. I didn't think this 1285 would be so huge, and boy, it's really turned out to be something else. Let's go and move into cable. Boy, are we pushing the number here. Boy, look at that. Holy smokes. Well, for right now, we're going to have to see how far it throws us down here. If that data comes in weaker, I saw where there was a big level they're looking at. I think it was 23.25. If we were to come down here, boy, this is something else. We've really pressed the levels here. We'll just go with 24 even in case we hit those stops. 24 even. Hang on, let's go back to this. Boy, this is doing one sick dog. We'll just go 24 even. And let's go and look on the upside. Go to the 2-hour chart. $24.15. I mean, apologize, $25.15. Let's go to the Australian dollar. When we let me tell you what, we're going to go to the other page when the data comes out, because there we've got the sterling versus the odd, the guppy. Hang on one second. And look at this dollar index; it's still continuing to push low. And no wonder why. Look here at the euro. And I would have thought yesterday, which we didn't get to yesterday, but that was our bias chart resistance. I thought this would have kept the dollar, in check, and then we roll over. Obviously, we're starting early in the morning, a new day, so we've challenged that. We haven't got to the dollar index bias chart yet, but we're certainly pushing it. And we continue to weaken here with cable. Let's go and quickly move into the Aussie dollar. Well, we got above the 70.27, and I actually had my resistance. We had our bias chart resistance yesterday at 70.48. You see that here. The high so far has been okay, not bad. 70.44, 70.44. So not bad here. 74. We'll keep the 70.48, and support. Let's go move into the 2-hour chart. I think we had that for 69.86. We're going to, let's see, here we go. We're going to keep the 69.86 because if the market does rotate lower, we're not going to go there by today, I wouldn't think. Support would actually come in right in here, I guess around this 70 even, but you have to allow for this. So this is where you'd see some support really coming in here, 69.86, even a little bit lower. Right in here, you'd see some nice volume coming in. Let's go with that right there. 69, let's call it 69.81, right there. And let's go and move into the Kiwi. Yeah, I see Amanda's saying here, Guppy's targeting the 133 level. Holy smokes. I mean, we're looking, we can get to the Guppy real quick, but I think, let me look at the Guppy real quick. Hang on. I've got 3460, which is a 78%. Let me just go and mention that in the room. I'm sure Amanda's aware of that, but I just want to go and notate that. But Amanda's just been nothing short of stellar on these starting pairs. But look at this, we continue to weaken here. But anyway, let's quickly go and get on to the Kiwi before we get into the sterling data. I mean, the UK data, so hang on. So we've had a pretty nice run here with the Kiwi. Actually, well, it looks like we just came and hit our buy chart resistance, 67.40. Yeah, we had 67.39. So it looks like we got fortunate and not hit that to the pip, I guess. Yep, actually, literally to the pip, 67.39. Our bias chart support. Let's move into that before we get into the UK data. Amanda's been nothing short of something else on these sterling pairs. It's amazing, and she has stayed bearish on this sterling. She has been right as rain on that. On the pullback, yeah, 66.80. We're going to keep that. So now let's move into the other screen for the UK data. Here's what I'm referencing here on the guppy. And we are just below it. So watch it here on the 78%. Hang on one moment. So right here, we're there. So be careful on this one. And we referenced here, and we're going to get to the here on the, I'm going to post the news here, but look on this starting versus the odd here, and we'll quickly go to there. I want to make sure we don't run out of time. Hang on, not out of time, but before the news is released. You see right here, we've just taken out the 77.40, but we talked about the disparity between these two exponential moving averages. Amanda was also referencing, we're talking about the guppy. Here's the cable right here. Let's go and get ready for the data. There we go. So, okay, let's move this here. There we go. So we got the guppy here, starting versus the odd. I mean, yeah, and the cable. And here comes the data. That's in another 17 seconds. Okay, here we go. Just came out, and what kind of reaction? I get a little bit of a, I wouldn't even call it a bounce back, but I guess if you were long the cable, you could find some some solace in that we're not making new lows. Oh my God, I'd hate to be long. There's been a sad, sad long road lower if you've been long the sterling pair. Um, well, it came in a little bit better. They're looking for 22.8 thousand, 38,000 here. Employment change, they're looking for 45,000, got 28,000. And the unemployment rate at 3.8%. I mean, the way I'm looking at it is I think they were thinking, could it really be like horribly bad? Hence, my thought is I would be looking here. We talked about that here. Let's move this out of the way. See, we've already been looking for 77.40 since the beginning of the week. And think of it, we hadn't even gone to 61% because we were like right here. And I'm like, okay, we're likely to be testing here on our way down to 77.40. Okay, now we took it out by, we're at 77.27 right now, but you've gone past this. This is a pretty good little support level here. And I'm talking about as far as volume. Okay. So right in here, this whole zone, I mean, we just had the report. If there was a chance for them to go on and push it even further, you had it right now. You just had it. They could have really taken off. So once again, like I said at the top of the hour, at the very least, I would tighten my stops. If not, maybe you may want to have, like I said, some limits below here that we're going to say, okay, in case we move lower. But we already had, look at this. This has been a huge fall. Now, I'm not saying it can't fall lower because, like I said, a man has been right as rain on these sterling pairs. But I'm just saying and I'm looking for a technical standpoint, not anything else, is that look at the disparity here between the exponential moving averages and look at the disparity here too. It's matching it. It's actually even stronger than here. Although if you look at this, look at the difference. This is a march higher. Boom, boom, boom. These are pretty good ranges here. But look, this is after a pretty good fall already. You see what I'm saying? Look at this. It's just been so. Just be conscious of that. Going back here, let's take a look at the guppy. Well, there's 3460. We're there. We're there at the 78%. So you come into some key levels with the guppy. Well, key level, not so much a key level, but a key 78%. And as I mentioned before, I mentioned it on the roundup also. I've got the saying is that, while I use it, would look at the cable, I go, cable loves the 78%, i.e., Blue Horseshoe loves Anacott Steel from the old Wall Street movie. I've mentioned it so many times, but cable likes to react off the 78%, either the extension or retracement, really loves to react. So now it doesn't mean that we're going to turn around and start shooting up higher, but, after this big, big fall, certainly a good area for those that have been participating in this thing to take that profit, but that's up to you. But we'll go back to the main screen for the cable. Let's go back there. Kind of interesting. Way we've done the show so far, but obviously the UK data made it important that we follow that. But you usually don't get to the cross rates until the second half of the show. Let's now go and move into the dollar CAD. And here's the cable. Still, we've got some support right in here. This 24.52. We were looking at those 24, but on a very short-term basis, 24.52. And let's see the high so far. I mean, the low so far has been 24.56. I mean, we are stretched here, but of course, like I said, the concerns also with Brexit, with Boris Johnson potentially more likely should they become the next PM. Let's go on and move into the dollar CAD. Well, our bias chart support, we've been looking for a potential move down here to 29.95. And I don't know how this thing got moved over here. I saw this yesterday because we've been looking for this 20. And the crazy thing was obviously it was an error because this is even higher than what was our, this was actually, remember, this was supposed to be our bias chart resistance. I don't know how that happened. I don't know if it's me or the system's doing that, because I know yesterday I put that 3077 when we were talking. I think we mentioned here on the daily roundup, but this has been 29.95 because we were looking. We talked about this market closing below, and we put in here the dollar CAD closed the week on its lows below support 30.43, opening a challenge of 29.02. You see the 29.02 there. With immediate support at 29.95, and that's our bias chart support, 29.95. Now, when we look on here on the 2-hour chart, and I don't know if that bias chart is playing tricks on me. I keep thinking it's myself, but maybe it's this doggone. You can never trust these stupid Windows computers, but I thought I had put that in there yesterday, but I know that this 3077, I know I put that in on the right side during the roundup. So I don't know what's going on with that. But anyway, that being said, that's our resistance here is 3077, and that's going to stay the same. We're going to the dollar peso. No changes here in the peso. I've got bias chart support here, 1886, resistance is 1906. Really, there's a potential for this thing to get down to 1865. So no changes here whatsoever here on the peso. I really don't see anything happening here. I mean, we made that foray above 1923, and a few people started to get bullish. I didn't really understand that. Made a few nickels on that day when the Mexican finance minister announced his resignation on Twitter. I didn't jump back in though. I mean, I did give, those that were looking at long positions and thought, well, maybe they got something here. I really don't see it here, but eventually we did fall back, and I didn't jump back with this any further. Let's go moving now to the dollar yen. No, we're sitting here pretty quiet here with the dollar yen. So I really just don't see any changes here from the bias chart levels we had from yesterday, which are going to be 832 and 777. So I'm not really seeing anything. It looks like we've been as high as 811, and that 778 is holding like a champ. So nothing here of any significance here with the dollar yen. Quiet as a church mouse. Let's go into the dollar index. This is a bit of a surprise here, especially after last week losing this level. And I had 97.08 as our bias chart support resistance from yesterday, and that does roll into today. But I mean, I thought we'd try and maybe come up here and then roll back down. It's a bit surprising to see this thing holding here. It's going to be really interesting today if we close above, 08. Really interesting. This is really, interesting area here. Let's go and take a look at the 2-hour chart. Well, we do have retail sales. If retail sales come in stronger, that can certainly give an extra push. So let's just go with 21 here. You know, it actually can push it even higher up to 26. Let's go. Boy, this is really interesting here. Retail sales is really going to be important for the dollar. If we do get, here's the problem. If we get a decent retail sales, not only will we tag there, probably going to open up the door for the dollar to try and make another push. Not up higher much, but probably to make a good fight in this area right in here. Tell you what, we'll just put it 97.21. 97.21. Not trying to top tick this thing, but watch that 26 if it jumps up there. As far as support, we'll move this a little bit higher. Let's go right here. That's just too close. Unless we see, I don't know, think about the wheels falling off the caboose, but we had a decent run here. Unless it comes off, let's go with 96.67 here for the cash dollar index. That's just the bias chart support for today. And with that, we'll move into the cross rates. Bunds are making another move higher, folks, which is going to keep the pressure on the euro, which is probably allowing this dollar index. Let's go to that just real quickly so I can show you. See that right here? So we've come off these lows, and this is going to continue to add some pressure. Now, we've got some resistance right there. You can see that. Let's go on and but that's keeping a little bit of extra pressure for the euro. Well, the guppy's making a stand here, or try, if you want to call it that, making a stand here at this 34.60, the 78%. Let's go on and move into the Kiwi yen. Well, we know the yen's been relatively quiet. Here was our bias chart support. We almost made it up to 72.83 and 72.75 is at 38%, but we've been there before. We had 72.68 right there. I don't see any reason to change it. And looking at support, we had 72.06 in case the market decides to go and pare back. It's really doing its best to hang on here. We'll go right here with 72.15. We'll move that up a little bit higher. Let's go with 16. And let's go on to the euro yen. Well, you know, the euro and its woes. I mean, we're just rolling right back down the hill. Let's go and take a look here. We have our bias chart support here at 2136, and we're going to keep that there. Resistance, we will lower that right there. 2179. And let's go into the Euro odd. Boy, this euro is really having a tough time. We had 60.20 and it's just below 160 even. Let's go in and here's that 59.92. I like this area right there. We'll go with that 59.92. We had that as an area that the market could potentially get to. We had, actually, we had listed as 59. We said 50. Okay, here we go. Euro's closed on the week on the lows, opening a move to major support at 59.55. Initial support is a major level of that should not be a major support at 59. Just moving to support at 59.55. Initial support is a major level of 59.92. I like that 59.92 on the short haul. And for resistance, and that's our bias chart support today. And for resistance, we'll go with 60.46. Next up is Kiwi Yen. So we've just about tagged the 67. I think we're looking for that. Yeah, Euro Kiwi is on a path to 67 even. Sellers are in control via the exponential moving averages. Initial resistance 69.06. So before we were a little bit better at the start of the week, I like the 67 cents. So we're just about there anyway. The low so far today is, what about 67.12? So 67 even. And let's look at bias chart resistance. And this thing is just weak as can be. Let's go with those highs right there. Boy, this thing is just in the dirt. Right there. 67.74. I mean, it'd have to be a ways back, but I'm not saying it's necessary for today. It's just if we get the short covering, that's where you'll see that first area make a decent little stand, 67.74. Let's go into the Aussie yen. We're fairly quiet here. Hang on. We've had a pretty good stretch here already. I like this resistance. We're going to go right there with that resistance level right there. 76.0. Let's call it 76.02. We had 19. Must have pulled that off of the daily. Well, we had 20. There we go. But I think this market's a little bit stretched here. Right there, 76.06. Let's go 76.06, which isn't that, just almost at the high anyway. The high was above it, but we'll go 76.06 from here on out. And support, well, I think we can rotate lower in that initial support. You're going to see some here at 75, 73, which I think is a little bit too close. Now, let's go right there. That's still pretty close, but we'll go with that. 75. We'll go just a little bit extra room here. 75.64. Going into the guppy. Well, we've already spoken about the guppy, and you got look, we've made it down here to the 78%. We talked about how sterling loves the 78%, and I'm going with that, 34.60. We're already right now 34.69. So 34.60, 78%. This is pretty huge in my book, but I know Amanda's still looking for lower. 34.60. And on the upside, $35.18. It's a ways up, but if we do see some short covering, that's where we'll see the resistance. Starting on. Well, we've been saying the market's on its way to testing 77.40. I'm staying with 77.40. I can see where there's still the downside pull because of the concerns with Boris Johnson, but we've hit some technical levels. I'd just be wary at this point. As I mentioned, if you don't want to, take stuff off the table, at least tighten your stops. I would think. As far as intraday resistance, my goodness gracious. I'll just go with that high there, which is 78.34. 78.34. If we do see that short covering come in place, ensue. 78.34. Okay, and there's the bias chart for today. Now we do have U.S. retail sales on tap today. Let's right here, very important. Let's see here: industrial production capacity utilization, business inventories. Import-export price and retail sales, that's going to be the big driver today, the big driver. course, we had industrial production capacity utilization at 9:15 Eastern. That covers it for today. Thanks for joining us here on the European crossover, and good luck trading. See y'all in the chat room.